What's happening, traders? So, last week we broke down gold for you guys, and gold played out beautifully. The video was shared on my YouTube channel as well as the free Telegram group with over 700 members there. So, if you haven't already checked that out, make sure you click. I'll drop it in the description box below the link to that video, and yeah, you can look at that analysis that we shared. So today's video, I'm just going to do a quick recap for everybody on the gold trade that we looked at last week and capitalized on. So yeah, let's get straight into it. Um, Before we look at the gold chart, the usual story, I like to look at the dollar index. We can look at our weekly chart first and mark out our levels of interest. All right, so dollar index pretty much taken this liquidity down the bottom here, and price obviously reversed thereafter. Dollar has been quite bullish. I expected a little bit more of a pullback up in this area here, potentially down to the 104 level, 104.1. Didn't get that this week. We did get the initial drop, but it wasn't as big as I thought it would be. Let's just drop down to the daily chart just for a little bit more clarity. There you go. All right, so remember we reacted off the fair value gap on top here, and that was a sell on the dollar that I was looking at with a potential extension move down for a retracement all the way back to the 104.1 level. Didn't really get that. I see that price liquidated this low, which is fine. I mean, you do have a bias going into the market, but throughout the week, certain events happen. I mean, we had CPI, we had FOMC minutes, so there's a lot of fundamentals that were in play last week, and obviously were a big factor in why we had this bounce down here, and not the full retracement that I thought would happen based off this FIB level here. So that was what I was looking at. I was looking at least 50 to 61, with the potential 70% being hit, but didn't give us that. So as a trader, it's important to always react to current market conditions, instead of chasing a fixed bias. You got to be adaptive to conditions that are in play. So we scooped that liquidity down here, and price ultimately reversed. We've got the big bullish engulfing candle on the daily, and you can see we've got these three candles here. 1, 2, 3. That indicates a morning star pattern. So yeah, we could actually get a further move to the upside, liquidate up here, 107.38 area, tap into maybe buy side resting above this area. And weirdly enough, gold actually moved pretty much the same in the latter part of last week with the dollar index, which is not usually typical. We do have an inverse relationship between the two. That being said, we will look at new buy sides resting here on the dollar. So that's going to be our new buy side area of interest, and we could look at filling this liquidity void up here, or fair value gap imbalance, whatever you want to call it. So yeah, before we get any further move down, so you will be looking for something like this, and then the reversal thereof. So we could see something like that, and then maybe later on, moving into next year, get a tap here, or later on in the year, not even next year, tap into that area, and then push up further. It all depends, guys. It all depends. There's a lot of fundamentals, like I mentioned, in play, being the war, geopolitics currently going on, with the US, Russia, Ukraine, Israel, Palestine, all kinds of dynamics around the markets. So, all right, that's the dollar. So moving into gold, we can start on the weekly. So weekly chart, we've bounced off a key level of support, 108, 102, 104, or 10, sorry, at 1804 or 1808. That was our support area that we had marked off. You can see we had a good clean bounce off that area. So ultimately, where is price moving to next? You would need to draw out your next resistant area, which would be up here. That is the next realistic resistance area. So we just draw this here. Okay, so I would have that area marked off as my resistance. We could look at a extension all the way into that area, maybe even liquidate some of these highs before I move down. But we are bullish on gold. Currently, you'd want to wait for this breakout. You can see we've had a nice sort of correction that happened there throughout this year, from April down to October. So yeah, good correction happened there. Held at the support. You would want to wait for the breakout here on the weekly. Maybe wait for the next candle or two before the retracement back down into this area here for the retest of this breakout on the trend line, and then yeah, the impulse back to the upside to take out these highs all the way here and tap into that level of resistance. So that's the weekly chart. If we drop down, we can go to the daily chart. So on the daily, all right, you can see we've got this. We've basically got loads of imbalance now sitting here. We've got this fair value gap here. We've also got a potential new imbalance area forming up here. We've got a level of resistance that sits up here. So it would be interesting to see how price reacts in this area. You want to see price obviously break through and hold above this resistance, turn support, come back in for a retest, and then move further to the upside. So at the moment, I mean, you can't really enter anything off this. You would need to see a retracement before any major move up. Let's go to the 4-hour chart. So on the 4-hour chart, you can see we've got beautiful area of imbalance. I would want to see price come back here. So this would be a potential area of interest. That would be my fair value gap or imbalance. You've got price giving us these higher lows on the 4-hour. So there's the first higher low, second, third there. You'd want to see price tap into that fair value gap and potentially hold at that trend line before your next impulse up to the upside. Just on the 1-hour chart. So guys, I gave away this trade last week literally for free. We were expecting price down here to tap into this sell side and then tap into the FEG that was on the 15-minute chart here. That never happened, right? So what did happen was on Sunday night, market open, we actually opened up here, right? So price literally, jumped this entire area on many brokers. And we were in this area here, 1850. I obviously wanted price to get an entry down here, but you got to adapt to the market, guys. I mean, if price opened here and you can see this thing is bullish, we've taken sell side down here, we've corrected in this area here and then broke out again. So what's likely to happen again? What move are we likely to see again? I had the 1850 as first target, but second target was 1862 and then 1880, which was up here. So you could have still scaled in, gone onto your lower time frames, found an entry down here and capitalized. I entered this trade down here. So I will break down now why I entered that. I saw price, sort of consolidating in this area. We formed this flag and, I saw this low here being taken and we had this beautiful bullish engulfing candlestick on the 1-hour time frame. So that for me was my entry. I entered here. I shared the trade on TikTok, on Instagram. So I took this trade on my live account, and I made profits on it. We moved all the way. I had to take profit of, so entry was on that bullish engulfing on the next candle pullback, which is that red candle there. We had a pullback there. That was my entry. My stop loss was at the low, which was down here, the new low that was formed on the 1 hour chart. And my take profit was 1880, guys. If you look at it, there's 1880, right? So that was a beautiful 1:4.7. So almost a 1:5 trade, guys. Literally a 1:5, just based on the fact that we were going to have this breakout of this. Let's just do this here. So we were going to have this breakout of this bullish flag, which we did. And we had a impulse thereafter. We came back, we retested this area. Can you see that? If you pull this across, that was the retest. So we retested that trend line. You could have scaled in more entries down here. That was actually the confirmed entry. So if you were hesitant to enter off this bullish engulfing candlestick there on the 1 hour, you could have got in on the confirmed entry, which was the retest of that trend line, which was down here, which was there. And you would have waited for the bullish candlestick there with your stop loss below the low, and bang, 1880 was smashed. We even went way further than that, guys. This trade gave like almost 500 pips, or actually more. That's 800 pips, guys, from call it 1850 all the way up to 1932. So yeah, it was a insane trade. I didn't get in, unfortunately, on this higher low. I was out already at 1880. And yeah, I would now wait for price to give me that retracement before I look to go long again. And you can obviously utilize the fib for that. There you are. You wait for some exhaustion on the top here first before pulling the fib. But just to give you some context, that's the area we're looking at, the 50%. Yeah, we've got that 4-hour FEG imbalanced area in there as well. So ultimately, good area to look for a long. But yeah, gold was smashed, guys. Gold was absolutely smashed. I hope everybody caught that with us. If you'd like this video and you want to see more content on other forex pairs, gold, silver, I don't only trade US 30. I do predominantly trade it, but yeah, I'm happy to break down anything else for you guys as well. Hope you enjoyed the video, and don't forget to drop a like, comment, and subscribe. I'll check you guys on the next one. Cheers.